This is June from Turning Point Life Investment, and this is your market analysis for January 9th, 2010. Okay, starting with a 3-year weekly view of SPY. The market started off with a very nice week, first week of trading for the new year, pulled in another new high. Now, I mentioned from last week's analysis that the market is showing overbought, and you can see how the stochastic, the lines are in that overbought situation or overbought condition. Not to mention that we've been experiencing some divergence with the MACD for quite some time now. So these are just cautionary notes as far as being long. It's showing that it's hitting an extreme level and showing a bit of weakness as the market continues higher. But that doesn't necessarily mean that you should short the market immediately. It just means that to be a bit cautious going long, or at least to protect the existing profits that you have already. Okay, next going into a daily view, 6-month daily view, we saw a nice bounce from this 20-day moving average last week. Even though the market went higher this week, it was kind of meandering its way higher. Wasn't really anything explosive. It just creeped its way higher slowly. You can also tell that the volume is a bit low. So, as far as the bullishness, it wasn't exactly very enthusiastic. Even though the market did go up, there wasn't a whole lot of strength behind the push, behind this move. So in terms of support and resistance, I would at least expect some kind of pullback next week, maybe to retest this 20-day moving average. The market more or less went up for 4 or 5 days straight, so a little bit of sideways consolidation or a minor correction is duly needed. Again, I said to retest this 20-day only because they managed to hold here. So that will be around the 11.12, maybe even the 11.12 and a half level. Anything deeper, we can probably retest this 50-day moving average. So that's about the 110 spot right around there. So other than that, there's really not much to say about this market. It just continues to chug along. I've mentioned last week that even though there were signs of weakness, the trend is still up, right? You can't deny the fact that we are still in an uptrend, and we haven't exactly seen any signs of a change in trend yet. Not until we start seeing lower lows and lower highs, then can we switch camp and be a little more bearish on the market. And I know there's a lot of people who like to call tops and bottoms, but as you can tell, it's been a pretty dangerous trying to call a top for this market. So why fight the tape, right? Just go with the flow, go with what's the least resistance, and the least resistance right now is up. But I've already mentioned to be a bit cautious. It's showing some signs of weakness, and there wasn't a whole lot of strength behind this move. So okay, let's take a look at the VIX. Looking at the sentiment, where the VIX continues to break down lower. We're underneath the 20 right now, and we're in the high teens. So in terms of the VIX, it's actually being bearish, so that translates to bullishness in the market. So one thing you have to know about the VIX is that even though the lower it goes, the more bullish the market gets, but it gets to a point where it more or less acts as a contrarian signal where the VIX is too low and the market's too bullish, and it's almost like one-sided, and that's where you have to be a little more careful. And usually it's when the VIX is pretty low, probably in the low teens or somewhere in the mid-teens. That's when you should be very cautious about going long in the market, because that tells us the market is just too complacent and there's too much bullishness going on in the market. So that's the only time when you should be kind of more or less bet against the current trend. But right now it seems like the VIX just wants to continue breaking lower. And if it does head to the mid-teens, I would start looking out for any possible contrarian signal with the VIX.